Hey, what's up, everybody? Today we're going to learn about PDAs. Before we get into the topic, you need to understand basic smart money concepts. Like you need to understand what is liquidity, what is order block, what is breaker block, and you need to understand all of those to be able to understand this video. So, what is PDA? PDA PD in PDA stands for premium and discount. And what is array? Arrangement of all of these topics in a sequential fashion. So you understand what is buy side and sell side liquidity, order block, breaker block, and fair value gap, etc. But how are you going to look for all of these in the chart and determine where to enter and where to exit, right? So for understanding that, you need to identify a framework or model to determine that. So that's when PDA comes in play. So what do you need to know before we get into the topic? So you need to understand what is premium, what is discount, and what is equilibrium, and what is the dealing range. We talked about all these in the Fibonacci video, and I explained what is premium, discount, and equilibrium, and dealing range, etc. If you don't understand all these, you need to go watch that first before you come back to this video. And what is PDA for? PDA is for making an entry, for averaging into the positions, and to determine invalidation and to determine the targets. And these are the steps to follow if you are looking to understand what PDA is and how to use that in the trading. So these are the steps to follow. So first of all, you need to identify your trading style. It could be a swing, it could be a day trade, it could be a scalp. It works on all time frames, all right? Depends on the type of trader you are. And the next step is to identify the swing high and swing low on the dealing range. And then next one is to determine the bias, whether it's bullish or bearish, and then determine the sequence. These are the sequence. In a bullish scenario, you're looking for all these bullish mitigation block, bullish breaker block, liquidity void. Look, think about it. So all of these are arranged in an order of importance. So first, you should be looking for bullish mitigation block, bullish breaker block, liquidity void, fair value gap, bullish order block, bullish rejection block, and old low in a bullish scenario to make an entry, right? So let's say this is Solana chart. So if you see, this is the dealing range that we are looking at. Remember, I told you not to trade anything because, we have to wait until this range is broken. So what do I mean by that? So we have to wait until this liquidity above this previous high is taken out. That's when you can enter this position. So here, you see the sell side liquidity. Is taken already. So here you have buy side liquidity, and that is yet to be taken. So once that buy side liquidity is taken, that's when we are going to have market structure shift. And when this happens, that's when we can enter this position at OT. So when buy side liquidity is taken, we have the dealing range. Let's just imagine that it already happened, okay? So first step is to mark out the swing low and swing high. So swing high is going to be at 109 and the swing low is going to be 79. So between these two, where are you going to enter the trade? So that's where you're looking for a PDA. All right, so now you go to the lower time frame. Let's just say it happened already, okay? So it climbed up and touched 109 and then it started coming out. So you imagine that it already happened and it came and it's coming down. So where are you going to enter? So on the 1 hour, the first thing you're going to look for is a mitigation block. So you are bullish because the market structure shift had happened and it's coming down. So now you're looking for an entry. So these are the possible entries. So you need to mark out your point of interest. The point of interest could be a mitigation block that is here. Is this where you're going to enter? No, this is, another thing I wanted to stress is always your entry should be in discount when you are, just a second, let me show you what I'm talking about. See, if you're looking for a long position, your point of interest should always be in here, not here. It should never be in premium. It should always be below 0.5 and it should be here. So if you are looking for an entry, here you have a liquidity void. All right. Here you have a liquidity void, and here you have a mitigation block. And here, see, this is where we had a breaker, right? So here, are you going to enter here? This is the breaker block. No, probably not, right? Because it is in the premium. And these are your point of interest. Like this is one point of interest. And this is one point of interest. So this right here is a bullish order. So let me show you what I'm talking about. First, bullish mitigation block. So here is where the first mitigation block is. Are we gonna enter here? Probably not, because it depends. It could bounce off of here, by the way. Don't think like it should come here to optimal trade entry before it goes up. It can bounce off here or here or here. Anything could happen. Below the discount range, anything could happen. So bullish mitigation, the first bullish mitigation block, no, we're not entering there. If the momentum is pretty good, like, if it took the liquidity here and it started going up, we could take a portion of long entry here because it's in the discount range. And then the next thing you should be looking for is a bullish breaker block. So here, where did it first break? So here is where it's first did a change of character here. So here, this is your breaker block, bullish breaker block. However, it is in the premium, so you don't consider that. And the next thing you would consider is liquidity void. So liquidity void is pretty much like fair value gap, and that is in the discount area. So probably you can enter here. So you can enter 10% here, 30% here. And then the next thing is to look for the bullish order block here. And then bullish rejection block, and you have the old low. So when I said it helps you make an entry, this is what I mean. Like when it comes down to PO, point of interest here, the fair value gap, or the bullish order block, or the optimal trade entry, you could enter partially here, or you could enter directly at any of these and wait for, if you're entering here, you would place your stop loss below your sell side liquidity. Look at that. That is like 9%. That is too generous, and it is really hard. And that's the reason, I told you to average into these. Like, you can enter here, or you can take a calculated risk of, if you're entering here, you keep your stop loss here. And still that is a little too generous. So that's the reason we average into all of these. Like, if you're averaging it 10%, 20%, and when it comes here, you go for a full position, you wouldn't be, your average is somewhere around 83.83, and your stop loss is somewhere around here. So if your average is here, your stop loss can be below the previous low. That is still okay, considering how much we are looking for. It could go as high as the previous high. This is my February target for Solana. I'm expecting it to go till here. So when it comes down here, it should go as high as here. But in order for this to happen, first of all, it has to do a market structure shift. All right. I hope you understood what a PDRAs and what to look for in all of these. Like these are in order of importance, and also like you should not blindly go by, okay, yeah, I have to enter here. I have no, that shouldn't it shouldn't work like that. Like you should understand the momentum, like when it comes to here, and when it breaks through this order block, what's the point in entering here? You know what I'm saying? So you should understand the volume and momentum too. So check the volume, and you should make sure that the volume is not too bearish at here. Okay, so that is something you need to remember when you're entering all of these. I hope you understood what PDRA is, and if you have any questions, please do let me know. I'd be happy to help you. Thank you so much for listening. You have a wonderful day. Bye.